Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. For this week, we'll be analyzing the markets as they closed on 20th of April 2018, and we're going to be starting our analysis off with the S&P 500 E-mini futures market. So this past week for this market, we did witness a move up and above this midterm support and resistance level that we've been talking about for this market in our recent videos. We've talked about how we had a minor swing low around here, and then multiple occasions when price found resistance off the same level. This is roughly the 2650 level, and this week we did see price actually make an authoritative push past this level, which also sort of confirms the fact that the buildup that we were seeing underneath the level was probably indicative of the very push that we saw last week as buyers started to gain control. However, as you can see, the momentum really didn't last very long at all, and we did actually, towards the end of the week, saw price pull back to this level, and so far, at least as far as Friday's close goes, we're still sort of sitting at the level, and for now we're holding as support at this level. So if we really just do continue to hold as support here and price rebounds off this level, we could see higher price levels for this market, and possibly even a push higher up to these more important swing highs right around here. Importantly, though, we're also looking at this market from a different perspective, in that we're seeing that we're also posting higher lows and lower highs here, which could possibly be indicating at the at a potential triangle or wedge pattern formation for this market as well, which could also mean that the market will probably continue to consolidate and tighten up around this wedge pattern formation before eventually creating a more effective breakout play in either direction, which could be a move down for a more elongated sort of a pullback into this very long-term uptrend that we witnessed for this market in the past, or we could break towards the upside, possibly pull back, hold as support at this descending trend line over here, and then just continue our way up to resume with the longer-term uptrend. However, it would be really too soon to suggest that the market is actually definitively caught up in a wedge pattern formation. Typically, we would like to see at least 3 touches of a trend line to confirm its presence. So far, we've got 2 touches here. If the market does sort of continue and push towards this support trend line over here and rebounds, that could definitely confirm at least a support trend line for the wedge pattern formation. Notice that we actually do not have the market over here going for a 3rd touch of this trend line, so we're still not sure if we're going to have to put this trend line in here as a valid ceiling for the triangle pattern formation, because as it stands right now, we could even stretch a trend line like this and call it a more tighter wedge pattern formation. So really, we just need more information here in terms of price rebounding and creating these minor swing lows and swing highs to confirm if we're actually in a triangle formation. But what we really do not need a confirmation for this market for now is the fact that the market is obviously for the most part sideways, and we really do not have any major definitive move in either direction, which is natural given the fact that the market has held really well at the 2600 level, which is right around here, and has just been finding a lot of resistance in an attempt to basically move past some of the more definitive and strong swing highs over here, which really suggests that the market is obviously weak, and neither the buyers or the sellers are really in control of the market as of now. So this really just continues to be a wait and watch game for us. Again, like we said, if this support area around here holds at the 2650 area, we could see higher price levels and then possibly even a 3rd touch of this trend line if that plays out. So we'll really just be looking forward to some good action for this market in this week. Okay, so the next market we're going to be looking at here is a light crude oil futures market. Now, this was an interesting market to follow last week because we did see price action that was pretty much on the cards and predictable. We talked about the 66 major round number as playing a very important resistance role for this market. We also talked about how price had cautiously moved past this level, the the 6600 level. It was an authoritative move initially, as you would typically expect when the market is actually breaking out of a major resistance level. However, price did definitely make a move above, and we didn't see any major sharp push downs right back underneath the level to suggest that it could have possibly been a fake out. Instead, what we saw was price actually pulling back to the level, holding as support. We saw a minor bullish pin bar print right off the support at the 6600 level, and the market was eventually able to tick higher. If this bullish momentum continues, we're really just looking forward to this more longer term uptrend to resume. Obviously, now that the 6600 level has held as support, and given that it continues to hold as support, in case price does make an initial early pullback again to the level early on in this week, we will then definitely be able to see higher highs for this market, and just in general higher price levels. Talking about higher price levels, the market's pretty much sitting at and around the 70 major round number, and we suggest that if this bullish momentum continues, we could well see the market going up towards the 7500 level, which basically lines up with these more longer term swing lows. Obviously, very obvious instances of support off the 75, 76 round numbers, well back in the past in 2011 and 2012. If we do actually see the market continue to tick higher, this is probably going to be our next major target. Obviously, would expect all of this formidable support to possibly turn into resistance, or at least create some kind of obstacles for buyers as and when the market does actually make it up to this level. Again, on the flip side, if we do not see the market really create the kind of bullish momentum that we're anticipating here, we could well just again push right back down underneath the 6600 level, and in which case, if it then actually ends up holding as resistance, we could well just end up back into this notorious consolidation and sideways movement, where it's just going to be majorly indecisive and just not very favorable to either the buyers or the sellers. Okay, so the next market we're going to be looking at here is the gold commodity futures market, and this is a market that has just been stuck in that sideways consolidation phase for quite a while now, and last week was no different. We've been talking about the 1350 major resistance level for this market, which just continues to hold as a solid ceiling. For this market down here, of course, we've got a 1300 major support level. Again, multiple indications here where price just bounced very strongly off the level, and pretty much the same has been happening at the 1350 resistance level. The week prior to last one, we actually saw a fake out, a very textbook version of a fake out play, where price actually tried to make a push past the 1350 major resistance level, failed to close above strongly, and the sellers was just able to dominate after that. This week, that is last week, again we saw the market kind of push back to the 1350 resistance level, once again held very well at the 1350 resistance level, and the sellers were once again able to dominate for the rest of the week. So we're really just kind of stuck within this sideways theme, and as defined by the two green arrows that we've drawn here, indicating the 1300 round number and the 1350 level. For this market, we just continue to hunt for signs for an eventual breakout either past the 1350 resistance level, or maybe an eventual push right down to the 1350 level and a breakout then underneath the 1300 level. Until price really makes it past either of these two levels, we're really not very hopeful of a definitive and strong movement in either direction. Although, just looking at the fact that we've had a lot of retests of the 1350 level in the recent past, it could possibly be suggesting weakness of the 1350 level. Eventually we could just continue to tap and knock at the 1350 level and possibly eventually break it to the upside, but that really just remains to be seen. That is a scenario that we would be anticipating more than actually a push right down to the 1300 level, because we're seeing higher lows here, which suggests that the market is trying to move further away from the 1300 level and is now just probably tightening and squeezing just underneath the 1350 resistance level, which could possibly and potentially be an indication that we could be building towards a breakout towards the upside eventually at some point during the coming weeks. But really, all that remains to be seen. For now, we really do not have any major indications or signs to suggest that a breakout here is imminent. But like we said, we're just going to be continuing to look for signs for that eventual breakout play for this market. Okay, so next up we look at the euro currency futures market, which in terms of the price action that we're seeing in recent weeks is similar to the price action that we're seeing on the gold commodity futures market. Here too, we're seeing a very notorious looking long-term consolidation for this market. We had the market pretty much post a very strong uptrend up to this point. And over here, the 1.25 round number has just held as very, very strong resistance. We've once again had multiple tests of the 1.25 level here, and each time price failed to break past it, and we've just had sellers dominate the market every time that it tried to test the 1.25 resistance level. Down here we have the 1.22 round number that is pretty much holding as support for the market, and the market is really just indecisive for the most part within this channel defined by the 1.22 level and the 1.25 round number. An alternative view for this market and the recent price action that we're seeing here could also employ a possible breakout scenario from a wedge pattern formation. We've been looking at this scenario as well. Once again, we're seeing lower highs and we're seeing higher lows over here, which suggests that the market could possibly be tightening within this wedge pattern formation, once again indicating towards the potential breakout either to the downside or towards the upside. Once again, we would favor a breakout towards the upside just because it would line up better with the more longer term uptrend that we've seen for this market. Whereas if we do actually kind of break towards the downside, it could indicate a more elongated sort of a consolidation phase for this market, because as price does make its way down, it's going to be possibly finding some trouble at this major former swing high over here, a region of resistance that could easily turn into support, allowing price to probably bounce and then basically consolidate broader range defined then by obviously the 1.2 major round number and possibly the 1.25 resistance level. So just in terms of looking for a more definitive move for this market, we would expect the market to possibly break towards the upside. Although you can see on Friday we did close very strongly bearish and pretty much on the support trend line here for a third touch. If this trend line does not hold, we could definitely see a major a sharp move possibly towards the downside. Whereas if we bounce off this level, we could continue tightening up within this wedge pattern, or possibly within this more general sideways channel defined by the 1.25 and the 1.22 round number. Okay, so finally we look at the 10-year Treasury note futures market, which was also one of the more interesting markets to follow last week. Obviously, we had a very sharp and definitive move for this market. Most importantly, we moved past the 120 major round number, which had been holding this downtrend up for quite a while, and we'd seen a formidable support basically create at the 120 round number. This last week, we actually saw the market push right past the 120 round number, although noticeably we didn't see either an initial pullback or more extended rounded pullback to the 120 round number, at least so far, which also suggests to us that the market could possibly in the early sessions this week make an attempt to possibly pull back to the 120 round number and basically test it as resistance. If the level of course holds its resistance, we could see lower price levels for this market and for this longer term downtrend to continue. On the other hand, if the market really doesn't hold as resistance and we see a push right back up, possibly a quick initial pullback where the market holds as support again at the 120 round number, we could just continue with a more sideways consolidation theme, and this move that we're seeing here would then just basically show off as a fake out play rather than a true breakout. On the flip side, of course, we could just continue to drop like a stone over here, and the market could just never return back to the 120 round number. Just looking at the way the market closed on Friday, which was extremely bearish, it's just hard to say whether we're going to see an initial pullback or not early on this week, but we would definitely not rule it out and wouldn't be surprised to see some initial lack of momentum towards the downside as the market does actually continue to pull back towards the 120 round number and test it as resistance. So really it will just boil down to the 120 round number and whether it continues to whether it holds as resistance or allows price a way through and then just continue to act as support. And that really will then dictate whether this market is going to continue on with its with the longer term downtrend over here, or just continue with a more sideways theme, or possibly even a more longer term reversal or an extended pullback into this longer term downtrend. For now though, we're impressed with the fact that we're basically past the 120 round number, and on the face of it, it just suggests that the downtrend here should typically just continue and we should see lower price levels for this market.